Welcome back, and joining us for a look at the day's markets activity is Makwe Masilela from Makwe Fund Managers. Makwe, thanks so much for joining us today. And we've had markets kick off the week pretty sour, pretty cautious ahead of those inflation print that we're going to get from the US, as well as the Fed decision coming up. We also saw last week, as we ended the week, those US non-farm payroll numbers coming in higher than expected, but we also saw unemployment rise a tad bit. So what have you made of trade so far from what we've seen on Friday, and just looking ahead into the new week?
That definitely you cannot fight the Fed. Any data that shows us that, listen, the guys won't be cutting interest rates anytime soon, that continues to be negative for the markets. And I think we're at a point where we don't know what to do with that kind of a data, because it continues to be volatile. You get a sticky inflation, you get inflation moderating, you get poor job numbers. The following month is a different story. But as it stands now, we know the guys, they've got a dual mandate, that one of price stability and also employment. So those job numbers gave people say, listen, we have to start dialing back our bets that the guys will be cutting maybe in September. And now here we are, we're facing real reality now that inflation numbers are coming on the very same day when the guys will be making an interest rate decision. So it is what it is to see whether the guys, we know that the chances are they won't increase, but the question here is, going forward, what will they do? And remember, we're coming from a week where we got excited, where we saw the likes of Bank of Canada, your European Central Bank cutting, and for the first time, European Central Bank doing that just before the US itself. So now we're getting to a point where we might be getting to some reality check, because if you realize, if the US market at some point, they were flat for a very long period of time during the session, so trying to get direction. And also, the far right vote not helping the sentiments as well. We saw what it did to the euro, to the bonds as well, and that snap elections that have been called in France. Maybe that is why the CAC is the worst performing compared to the European peers. So we're in a position where fundamentals, they do matter, but what matters most is the direction of interest rates going forward.
And that brings me to my next question, because I wanted us to zoom in on the ECB's rates decision last week and how it may then impact, or if it does impact, the Fed's moving forward, because it did seem like markets were getting somewhat upbeat off the back of, prospects of a global easing cycle kind of beginning, but that doesn't seem like it's the case.
Yeah, and it's all because of the data that we just received, that shows us that, listen, maybe we have to dial back the expectations. But I think what it did, it reinforced our expectations, that yes, we should expect a cut from the US come September. And remember, there was a time as well where we thought that the US economy will do much better compared to the European economy. But things seems to be changing slightly, because you get a better print as well when it comes to the economic numbers. We've seen that the inflation has been at least going down much better than one in the US. So dynamics changed a little bit. But I think personally it was more of a reinforcement that, guys, you are not wrong to expect the US to follow suit.
Now, let's get into some company news, because we definitely cannot look further into our crystal balls to try and guess what the Fed will do come Wednesday. Alex Forbes' streamlining efforts and acquisitions seem to be bearing fruit, Mark, where there's growth on every front on that side. Assets under management, HEPS, double-digit growth. The last time I checked, that share price was up, I think about 6-7%. Markets really liking these numbers.
Definitely, but look into their, what you call it, members under administration advice, up a mere 1%, to 1.4. For me, that's a very serious indication, because others are driven by what is happening with the share prices. To see asset under management going up, yes, we've seen that they've managed to win your business, which is good. They've also managed to acquire some of the companies, but the performance of the stock market as well helped, So I'm saying, if you dig deeper and try to look if there's anything like organic growth, that is grow the number of customers, grow the new business. They didn't do that great, but here, you know, in the absence of any good news, we might as well cheer that because they didn't give us anything negative, and not forgetting that the dividends themselves as well, you know, did a good job as well to help the share price to go up the way it did.
Talking about dividends, Omnia, another company, declaring a special dividend to shareholders on the back of that strong balance sheet. But when we look at the numbers, we do see that, you know, revenue was under pressure as well as HEPS. Is this just a case of Omnia just having a strong balance sheet, a strong cash position in this tough environment?
And more diversified as well. Look, chemicals is the one that has been weighing negatively on them, but mining, they did well, they did manage to grow even the international mining, agriculture as well, you know, even though volumes were not that great at some point, but that helped as well, you know. And if also, you look that the South African chemical industry continues to be under strain, but yes, the strong balance sheet helped as well, but also I think the diversification of their business helped as well. And this is an environment where commodity prices have been declining, but they still manage, you know, to hold on.
Makwe, before I let you go, what is your stock pick today?
Pepco, I think the guys have a nice exposure when it comes to the lower LSM. They've got a nice exposure to people who are looking for value for money. The likes of Pepco, what they're offering is no longer classified, you know, as just for the people with lower income. Even people with high income, they do go now and then there to pick up something. And we know that their headlines were down all because of the cost they had to incur when they were acquiring new clients. Fintech revenue contributing almost 7% of the group revenue and continues to grow.
Okay, thanks so much for your time and insights and just taking us through the day's markets action. That was Makwe Masilela from Makwe Fund Managers.